President Donald Trump has just signed an executive order directing federal agencies to move marijuana from Schedule 1 to Schedule 3 under U.S. drug law. At first glance, this might sound like a technical policy shift, but for cannabis investors, it could be one of the most important regulatory developments in years. So what does rescheduling actually mean? And how could it impact cannabis stocks, company profits, and the future of the legal weed industry? In this video, we'll break down what Schedule 3 really changes, why Wall Street is paying attention, and whether this move could finally remove some of the biggest financial roadblocks holding cannabis stocks back. To understand why this matters, it helps to know how U.S. drug scheduling works under the Controlled Substances Act. Federal agencies like the Drug Enforcement Administration classify drugs based on medical use, safety, and potential for abuse. Schedule 1 is the most restrictive category, defined as having no accepted medical use and a high potential for abuse. For decades, marijuana has been classified as Schedule 1, alongside substances like heroin and LSD. From an investment standpoint, this has been extremely damaging. It limits research, restricts access to banking, and triggers harsh tax rules that make profitability very difficult for cannabis companies. Schedule 3 is very different. Drugs in this category have accepted medical use and a lower potential for abuse. Examples include ketamine, certain pain medications containing codeine, and anabolic steroids. These drugs are regulated, but they are legally prescribed and widely used in medical settings. Moving marijuana into Schedule 3 would represent official federal recognition that cannabis has medical value. This shift matters most because of its financial impact. One of the biggest challenges facing cannabis operators today is Section 280E, a tax rule that applies to Schedule 1 substances. Because of 280E, companies often can't deduct normal business expenses, forcing them to pay taxes on revenue instead of profit. This results in extremely high effective tax rates across the industry. If marijuana is moved to Schedule 3, cannabis companies may no longer be subject to 280E. That could significantly improve profitability, increase margins, and strengthen cash flow. Companies that currently appear unprofitable could begin reporting real earnings, changing how investors value the sector. Rescheduling could also improve access to banking. Even without safe banking legislation, Schedule 3 status could make financial institutions more comfortable working with cannabis companies, leading to better access to loans, payment services, and potentially lower borrowing costs. Another potential catalyst is uplisting. Many U.S. cannabis companies are currently limited to OTC markets or Canadian exchanges due to federal restrictions. If marijuana moves to Schedule 3, it could eventually open the door to uplisting on major exchanges like the New York Stock Exchange or the Nasdaq, increasing liquidity and institutional interest. It's important to be clear that Schedule 3 does not mean federal legalization. Cannabis would still be illegal at the federal level, and state laws would still apply. However, it would fundamentally change how the industry is treated by regulators, banks, and investors. There are also real risks to consider. Regulatory change in the U.S. tends to move slowly, and tax relief, banking improvements, and uplisting could take longer than the market expects. Some companies may not survive long enough to benefit. Financial pressure remains another key challenge. High tax burdens continue to strain cash flow across the industry, limiting the ability of many operators to reinvest, expand, or compete effectively, even with rescheduling on the horizon. There's also competitive risk. If cannabis is formally recognized as a medical product, large pharmaceutical companies could enter the market. With deeper pockets and established distribution networks, they could pressure smaller operators and accelerate consolidation across the industry. Because of these risks, rescheduling should be viewed as a potential opportunity, not a guaranteed outcome, and investors need to focus on balance sheets, execution, and staying power. Despite that, I remain very bullish on the cannabis industry. In my view, the key is focusing on profitable companies with strong balance sheets, businesses that can survive long enough to benefit from regulatory change. Personally, one of my favorite companies in the space is Green Thumb Industries, due to its focus on profitability, disciplined expansion, and strong cash flow relative to much of the industry. For investors who aren't comfortable picking individual stocks, ETFs can also be an option. Cannabis-focused ETFs offer diversified exposure to the sector, such as the AdvisorShares Pure U.S. Cannabis ETF, which holds several major U.S. operators. If rescheduling moves forward and the industry sees lower taxes, better banking access, and eventual uplisting, profitable companies, whether owned directly or through ETFs, could see meaningful long-term gains. When you step back and look at the bigger picture, Schedule 3 has the potential to reshape the cannabis industry. Thanks for watching, and I'll see you in the next one.